My name's Dara Gannon. I'm the Vice President of Programs and Donor Services at the Cape Cod Foundation. And I'm joined on this webinar tonight by my colleagues, Mary Beth Burwood, who is our Education Program Officer, and Marielle Peace, our Scholarship Coordinator. This dynamic duo runs our scholarship program, so we're really grateful for all their work supporting students, donors, and volunteers. I'll just quickly tell you a little bit about the Cape Cod Foundation, which was established in 1989 with a single $10,000 scholarship fund. And today we administer nearly 100 individual scholarships for many educational paths. And with our partner, the Cape Cod Association, we award more than $1.4 million in scholarships to local students annually. So as part of our 35th anniversary this year, we created a Postsecondary Success Series to support local students beyond scholarship dollars. This series is designed to connect students with experts and resources on topics that support post-secondary success. So this webinar is the first of the series, and we're pleased to welcome you to Understanding Your Financial Aid Award Letters. So now I'll turn it over to Mary Beth to introduce our guest speaker. I am delighted to introduce you to tonight's speaker, Jodi Conway from Conway College Aid. Jodi is a Cape Cod resident. She began her career at Northeastern as a work study student in the financial aid office and later at Bridgewater State. She spent 17 years working in the financial aid office, 11 of those years serving as the financial aid director, performing all functions associated with managing a financial aid office. She opened her business 21 years ago, assisting families through the financial aid process. She's a member of NASFA, MASFA, and SISCA. We are thrilled to have her with us tonight to share her expertise. Thanks so much, Jodi.
Thank you, and thank you for having me. I appreciate it. So before we start talking about financial aid awards, I just wanted to make sure that everybody has a basic understanding of what happens behind the scenes and how the financial aid offices receive this information from you. So when you completed your FAFSA and submitted it, you should have seen a document that came up that had a number called your Student Aid Index. And that index is basically a yearly measure of your ability to pay for college based upon the data that you reported on the FAFSA. So primarily income and assets for parent and student. And one thing that I always like to mention, because it's such a misunderstood issue with financial aid, is that SAI number that's calculated for you, that's heavily weighted toward income versus assets. So the more income you have, the higher your SAI is going to be. Assets are a much smaller portion of that calculation, and we'll talk about that on the next slide. And then just the overall premise of financial aid is that the family bears the primary responsibility of paying for college. And so when your SAI is calculated, they're not assessing things like discretionary spending. And I have that here, wants versus needs. Things like car payments, whenever I present, usually in a senior financial aid night, people will say to me, well, why don't they count our credit card bills and our car payments? And my answer to that is always this. If schools were going to assess your car payments, they'd actually be awarding more financial aid to families who purchased a more expensive car because you have a higher car payment. And obviously that makes no sense. So those items are considered discretionary. Not that having a car is discretionary, obviously, but how much you pay for that car is discretionary. So I think framing it that way helps people to understand why the system does not address those types of expenses. And again, this entire calculation, the assumption also is that paying for college is becoming a very high priority in your budget so that you're minimizing those discretionary expenses. So here I just wanted to point out the assessments for income and assets for both parent and student. So on the parent side of the equation, income is assessed anywhere between 22 and 47%. And the reason for that large swing is because there are other factors that come into play, things like household size. So if you had two families, both were making the same amount of money, but one family had 4 children, the other family had 2. Obviously, the family with 4 children would have less discretionary money at the end of the month because they're buying more food and things like that. And that's why, pardon me, you see the difference of 22 to 47%, because there are some other things that go into that. But here's the important thing is this asset. So assets on the parent side of the equation are assessed at approximately 5.6%. And that's a lot lower than people tend to think. Pardon me. So I've had, again, at my presentations, parents always say, I was told that if we saved any money for college, we would not be eligible for financial aid, or if we had money in the bank, they'd want it all. And that is simply not the case. These calculations assess parent assets at 5.6%. So I have the example here. If you had $10,000 in the bank, whether it's a money market, a savings account, a checking account, the assessment toward your SAI is only $560. So I hope that that kind of lays to rest the rumor out there in terms of assets and how they're looked at in this process. Now, on the other end of things, with student information, student income is assessed at 50%. And the reason for that is because students are not supporting a household. So the assumption is that they are and should be able to pay for college to the extent that they're able to. So student income is assessed at 50%, pardon me, but the first $9,410 that a student earns is protected completely. So anything above that is assessed at 50%. And quite honestly, in working with families over the years, I have very rarely seen a student that earned that much. So for most students, there's no assessment from income. But assets are assessed on the student side at 20%. Again, same assumption is that they're not supporting a household. They don't need to have reserve funds for emergency situations and things like that. So student assets are assessed much higher at 20%. So here I just wanted to show you, so when your FAFSA was submitted and finally they've been processed, it's taken months to get these FAFSAs processed. Hopefully this does not happen when you fill it out for the second time this coming fall. But I did want to show you where to locate your FAFSA data when you log into the FAFSA. So this is called the dashboard. And I entered this red arrow here to show you that you can print your FAFSA submission summary, which is referred to as the FSS. And by the way, you're going to be seeing a lot of acronyms. Financial aid is all acronyms. It's like a language of its own. And so you print that FSS, and that has all of your information on it. And it also has your SAI, that student aid index. So if you haven't seen that number yet, you definitely want to pull up your submission summary to take a look at what your SAI is, okay? Okay, so there's 3 different components. When a financial aid office receives your FAFSA data, the first thing that they have to do is figure out what the student's cost of attendance is, and that's pretty specific to what major they're studying and things like that. So there's 2 components to the cost of attendance. One is the direct or the billed charges, meaning the college is actually going to bill you for these charges, things like tuition fees and room and board. But then there's another component to the cost of attendance we refer to as indirect charges. And those are charges that the school doesn't bill you for, but they are expenses that you incur by sending a student to college for the year. So things like books and supplies, transportation to and from campus, and personal expenses. And by the way, those items are actually required by law. The federal government stipulates that the colleges do need to capture all of these items when they figure out their cost of attendance. So these are not just arbitrary items, they are required to include these. And I just want to spend 1 minute talking about transportation. So for most students, if they're staying local, transportation is a pretty small item, but we do have students every year that might go to school in Florida. And if that's the case, you need to make sure that you're accounting for round trip tickets to and from school. Generally, there's 5 times that they're going to be going to school and coming home. One would be August when they move in. They'd be coming home again in November for Thanksgiving, again at Christmas time, once more in March for spring break, and then back again when they're moving home in May. And over the years in counseling parents, that's an item that people don't factor in. So that's really important. If your student is attending somewhere where they do have to fly, you want to make sure you're capturing those expenses. The best way to do that, just so that you have a ballpark idea of what that's going to cost, is just pull up a website like Expedia and type in the destination and just take a look at what those costs might be. You can put in, dates for August, dates for November, and so on, because you really want to have a handle on what those charges might be, because that does change the picture quite a bit in terms of your out-of-pocket expenses. Okay, so when the school, they calculate your cost of attendance, the next thing they do is they subtract out that student aid index from your FAFSA. So they're taking your total cost, subtracting out what the feds have determined you are able to pay from your FAFSA data, income and assets. And the difference is what we refer to as need. And the need is the amount that the school can offer in financial aid. But be aware that very few schools are able to meet full need because of budgetary constraints and things like that. The only schools that meet full need are those that are typically Ivies and the very selective schools, those that have large endowments and they're able to devote a large portion of their budget to financial aid. So what you want to find out is there a gap in terms of if the school did not meet full need, how much were they not able to meet? And we'll talk about that next. So here I just wanted to give you an example of what gapping means. And again, that's when the award does not meet full need. So just a really basic example here. Let's say the cost of attendance is $50,000. Student aid index is $10,000. So the difference is the $40,000, and that's your need. So let's say in this example, the school is able to offer $32,000. So they gapped you by $8,000. And as I said earlier, most schools, there's going to be a gap for most schools because they do not have the budgets to meet full need. But it's that gap where you might have some room to appeal to receive additional aid. And we're going to talk about that. That's the second half of the webinar, but I thought it was important just to demonstrate for you what that gapping, what that term refers to. Okay, so as you begin to receive award letters, and hopefully most, if not all of you, have started to receive them, there's two things that you want to calculate. One is your unmet need. So you'd want to calculate, do you have a gap? Can you appeal for additional aid? So you want to take, if you go to the school's website, if you don't have a financial aid award letter that lists their total cost, you'd want to go to their website, get that information, then subtract out the aid that the school has offered to see what your out-of-pocket costs are. And if you take your total costs and subtract out your SAI so that you can calculate your need and then compare that with what they've offered you, that's going to show you if they've gapped you, okay? I know that can be confusing, so if you've got questions, please let us know. And then the other item that you want to calculate are your out-of-pocket expenses. And obviously, for most of us, that's the number that really kind of narrows down our options in terms of where the student goes, because we need to see how much it's going to cost us out of pocket. So to calculate that number is a little bit different than calculating your gap. So to look at your out-of-pocket costs, you're just going to be counting and using your billed charges of what the school's actually going to bill you. And then if there's, travel to and from campus, like I'd mentioned earlier, you want to factor that in. And then books generally, I mean, that can really be, one student might have books that cost $500, another student, depending upon major, could be $1,000. So that's an inexact number until they actually get to school and purchase their books. But I would say to be safe, if you factored in 800 to 1,000, that's probably a pretty good number. So you want to take all of those charges that you'll have to pay out of pocket, subtract the financial aid that was offered, and that's going to give you your out-of-pocket number. And then again, obviously, for most of us, that's the most important number to look at because, if you've got a school that your out-of-pocket is out of reach, that school perhaps is going to fall off the list purely from a financial standpoint. So you really want to calculate your out-of-pocket costs. Okay, and to do that, I talked about this a little bit. You're going to take your direct and those indirect charges like airfare, things like that, books, subtract the aid offered, and then you get your out-of-pocket costs. A couple things that you need to be aware of when you're calculating those numbers is if the student receives a college work-study award, and I'll talk about what that is in a moment, but if they receive a work-study on their award letter, that's essentially the offer of a part-time job while they're on campus. So that money is not deducted from their bill. Think of it as a part-time job, and the student is paid directly for their hours worked. So you don't want to make the mistake of subtracting that from your cost because you're going to come up short. That's paid directly to the student. Okay, so let's talk about some types of financial aid that you might see on your award letter. One would be a federal Pell Grant, and the government determines your eligibility for that directly from your SAI, that number that the FAFSA calculates. And generally, Pell Grant is reserved for the highest need applicants. And then there's another award called the SEOG. That stands for Supplemental Educational Opportunity Grant. And that's actually primarily federal money that's awarded to the schools, and then the schools determine who they award it to, as opposed to the Pell is determined by the government. But generally, the only stipulation with SEOG, the government tells the schools that they have to prioritize their highest need applicants. So you'll often see if you receive a Pell Grant, you might also receive an SEOG. It's pretty rare to receive an SEOG if you're not receiving a Pell Grant. And then here in Mass, there's something called the Mass Grant. And just by the way, when you complete your FAFSA and report that you are a Mass resident, your information is automatically sent to our state scholarship agency in Boston, and they will determine eligibility for Mass Grant money. For the most part, that's for Massachusetts residents, but if you do attend school out of state in Pennsylvania, Vermont, or DC, that money can travel with you, but that's the only 3 states where there's reciprocity with state money. So you might see a Mass Grant on your award as well. And then college work study, I mentioned briefly earlier. That's an on-campus job. I think as Mary Beth mentioned, I was a work study student when I was in college. I received financial aid, and I was work study in Northeastern. And then at Bridgewater, I transferred out of Northeastern and went to Bridgewater. And I was a work study student in both of those offices over 40 years ago. And that's where I got my start in financial aid. But generally, as I said earlier, students are paid directly for their hours worked. So people say to me, well, that's a job, it's not financial aid. But again, remember, most of that funding is coming from the federal government. So it's considered need-based aid. The schools do have to contribute a percentage, but it is federal money. But other than that, just think of it as a part-time job on campus. And I always have to mention too, I generally have parents say to me, I don't want my student working their first year. I want them to get used to school. But remember, the students now are used to being in high school for 7 hours a day. Their lives are very structured around that. In college, there's a lot of free time. And I personally think it actually helps the student to stay a little bit more organized if they do have some other responsibilities like a part-time job. I knew that I did better when I was working because I couldn't procrastinate with my schoolwork. If I knew I had to go to work, I had to get my work done. So in my experience, it's pretty rare that a student can't fit in like, 8 to 10, maybe 15 hours a week working. 15 hours is probably a high end, but I would encourage you if your student receives work study, have them give it a try. If it doesn't work, they can quit. It's not they're not stuck with it for the whole 9 months. If they just can't swing it, they can leave that job. So give it a try and see how it goes if they do in fact receive that award. And then the other, probably the most common type of aid that you're going to see on an award letter is the federal direct student loan. And so if you've begun to receive award letters, you'll notice that most often, if the student is offered the federal direct student loan, it's usually in 2 different versions. So one would be subsidized. And what that means is that there's no interest charged on that loan until 6 months after the student graduates, or if they withdraw for whatever reason, that 6-month clock would start at that point, but there's no interest until they leave school. Versus the unsubsidized version, interest does begin to accrue immediately. Pardon me. And so that, the student is expected to pay the interest while they're in school. It's a very small amount of money. It's usually billed quarterly, nothing that, that most people can't handle financially, but just be aware that there are 2 versions of that loan and nobody receives their entire loan in subsidized. It's usually broken out between both. So just be aware of that as well. And then overall, the government caps the amount that students can receive in that loan per year. So freshmen receive $5,500, which is what you're probably seeing on your award letters. Sophomores are offered $6,500, and then juniors and seniors are offered $7,500. So if the student accepts that loan all 4 years of college, they graduate owing $27,000. And that's pretty common for just about every college graduate these days, is it's that $27,000 debt in that one loan program. All right, so now we're going to take a look at some actual award letters because I wanted to point out a couple of things to you. So this is an older award letter from URI, and there's a reason why I wanted to share this because there was something pretty compelling on here. So I actually broke out some of these expenses in this blue box, but what I wanted to show you was on the URI award letter, they actually do post this EFC. So just so you're aware, SAI and EFC are the same number. The feds decided to rename it this year. But what I wanted to show you is that this family, the feds have said that they can afford to pay $5,972. But when you run the numbers, their actual out-of-pocket costs are $25,374. So that absolutely does not align. Couple reasons for that. One is that URI is a public institution and it's out of state. So a Massachusetts student going to URI is charged for out-of-state tuition. So it's a much higher cost than those in-state students are charged. And then the thing to understand with state schools is they don't have large endowments like these private schools do. So their financial aid budgets are much smaller, and generally they prioritize their in-state students before they offer money to out-of-state kids. So very often with a public institution that's out of state, you're going to have a very large gap because they just don't have as much funding to offer. So I wanted to just point that out to you. Can you appeal? You may, but again, state schools are very limited in what they have to offer. So it's a little bit more difficult to appeal with for them because they don't have institutional money that they can offer to you. They're really taxpayer funded. So state schools, the profiles are a little bit different in terms of financial aid packages. So let's look at an award from UMass Dartmouth. So all they have on here is the Dean Scholarship and the federal loan. There's no indication of what the costs are, what your out-of-pocket costs are. So they're relying on the family to research what their cost of attendance is and then subtract out their aid to arrive at your out-of-pocket costs. So this is from Roger Williams, and this is a little better. So here they did list the estimated university charges, and that would say to me that those are direct or billed charges. So it's $61,132. So they're really not telling you here what they have budgeted for your indirect or your books and supplies and transportation and things like that. So that's missing from here. But at least they do give you the billed charges. They subtract out the $24,000 in financial aid to arrive at your estimated direct cost of attendance or out-of-pocket costs of $37,132. So this is a pretty good award letter. At least they're telling you what you have to pay, and you don't have to kind of do all of that work on your own behind the scenes. Now we'll look at Stonehill. So Stonehill also, this is a pretty good award offer. They do provide the estimated billed charges of $54,500. They also include housing and food. And then they subtract out grant aid so that you get your out-of-pocket costs with just the grant aid subtracted. And then they have a separate line item for the loan. I'm not sure why they do that. Personally, that sort of would be confusing to me if I was new to this process. But I think they want to get the point across is that you have the choice whether or not you want to borrow that. And if you choose to, your out-of-pocket cost would be $33,800. If you don't want to borrow and you can replace that $5,500 with cash, then your bill would be $39,300. So just wanted to kind of show you that as well. And then down here, they've kind of buried their indirect charges in this paragraph that says, we estimate that resident students may also incur approximately $4,200 in additional non-billed or indirect charges. So they've got transportation here of $672. That says to me that's a fairly local student, obviously no airfare required. This additional meal allowance, that is, I have no idea what they're referring to on that because they've got the meal plan included up here at $15,300 with housing. So I'm not quite sure what that is for, quite honestly. And then they have books and supplies estimated $893 and miscellaneous at $930. So they are giving you all of this information, but again, the most important thing is your out-of-pocket costs, and they do calculate for that for you, so that's good. Tampa is giving you your estimated institutional costs, but this is one of the schools that packages a federal direct plus loan. And I think why this is so frowned upon is when somebody who's not used to this process and has never really seen award letters before, you look at this award and it looks like Tampa is giving you a lot of financial aid. But then when you actually look at the fine print, you realize that $41,210 of it is the offer of a loan. And Parent Plus loans, unlike the federal direct student loan, where that's an automatic approval, there's no credit check with the student direct loan. But the Federal Plus loan, the parents have to pass a credit check. So I just wanted to show you what that looks like and to alert you to that if you see those on your award offers as well. Okay, so now we're going to segue into how to appeal awards. And so there's two different types of appeals. One is need-based and the other is merit. And we'll talk about those in detail in a moment. But just to be aware, any need-based financial aid appeals, you're going to be appealing that with the financial aid office. And need-based, I mean financial aid eligibility, not merit awards. So be aware that need-based financial aid is not negotiable. All financial aid is calculated with numbers plugged into calculations. There's nothing subjective about a need-based financial aid award. The financial aid offices are not allowed to award that way. It's very formula driven. So you can't negotiate a need-based financial aid award. The only way that you could get an increased award is if you can present a financial situation that requires them to revisit your eligibility. Pardon me. And by that, some general items would be if when you filled your FAFSA out, you remember it was based upon your 22 income. So let's say you've done your 23 taxes and your income is a lot lower. That's an item that you can appeal on to tell them that my current income is much lower than it was in 22. So it's kind of artificially inflating my ability to pay. And many schools will address that. They might ask for your 23 taxes so that they can see what the numbers look like, but they are allowed to make adjustments for situations like that. Let's say you have exceptional medical expenses, things like that you can share with them to see if there's something that they can do to open up some more eligibility. Now, versus a merit award, that would be appealed with the admissions office because merit money is offered by the admissions office, and you can negotiate those awards if you're negotiating with comparable colleges. And by that, I mean schools, their costs are comparable, their selectivity is comparable, demographics and things like that. So let me just talk about selectivity for a moment. So if you were appealing merit awards from two separate schools, but one school admits 20% of their applicants and the other admits 50% of their applicants, the selectivity is wildly different between the two. And that school that accepts 20% of their applicants is probably not going to entertain an appeal from a college that accepts 50%. So you need to kind of think about that and make sure that you're appealing with schools that are very similar. Otherwise, they're not going to even review the appeal at all. And when you're appealing need-based aid, that should always be parent initiated because that's generally income initiated. And in financial aid, that's best with parent handling that. But with merit appeals, definitely the student wants to initiate that. The admissions offices do like the students taking the initiative on that. So that's something that makes sure that the student initiates that. Just as a quick aside, I had a parent that I'm working with this year that submitted an appeal for merit. And she shared with me the letter that she wrote, and it was a fabulous letter, but it was clear that she had written it and not the student. So that doesn't tend to reflect well in a merit appeal. So you want to make sure the student writes the letter. Obviously, you can proof it grammatically and things like that, but you want it to be in their voice. That's really, really important. So now let's talk about need-based appeals in more detail. So if you think that you have a situation that warrants a need-based appeal, the first thing that you want to do is check the college's website to see if they have an appeal process listed on their financial aid page. Many do, but many don't as well. So what some schools have done is they've created a document that you can download and fill out to begin the appeal process for need-based aid. So you want to see if that's available before you begin. If it is, fill it out, send it in. If it's not, my suggestion would be to call the financial aid office and tell them that you'd like to appeal the award and what's the process. They're probably going to ask you to send an email with detailed information or a letter. And so Also be aware that successful need-based appeals are often due to circumstances beyond your control, like job loss or job income decrease, illness, medical expenses, things like that. And as I mentioned earlier, with car payments and those types of things, lifestyle choices are rarely considered justifications for a financial aid appeal. And so again, anytime you're appealing for need-based aid, you have to communicate it in writing. The school has to have documentation in the student folder. If they're going to change the award profile, they need to document why they did that. That's really important for them. That's actually a legal issue on their end. So if you are appealing, be very specific as to why and provide numbers so that they have everything they need to plug in to see if they can open up some more eligibility for you. And then here I have just refrain from selling the student on a need-based appeal. Again, nothing subjective about need-based aid. The financial aid office, quite frankly, doesn't have the time to read all of that. They don't want to know that your student's a really great student and they want to go there so badly. That's not something you want to include in a financial aid appeal. And then this year especially, because the aid packages are coming out so late because of the FAFSA delays, if you submit a financial aid appeal, but you don't hear back before you have to make the deposit, call the admissions office and inform them that you have submitted a financial aid appeal with the financial aid office, but you have not received a response yet. And would they please extend the deadline to give you time to receive that information back to see if they were able to increase the award? So that's something generally that wouldn't happen, but this year, because of the late awards, that might be really important. And then the last item here is asset reduction is not appealable, meaning when you report your assets, the only way to report them is like a snapshot in time. I think the FAFSA says, as of today, what do you have in the bank? What are your assets worth? Assets can change on a daily basis. They just cannot continue to revisit awards to address any asset changes. So again, don't appeal on asset reduction. They can't take a look at that information. So here I just wanted to give you a list of the different circumstances that might warrant a need-based appeal. And again, this is an exhaustive list, but it's one of most of the common ones that I saw as a financial aid director, pardon me, and that I see with my clients. So I wanted you to have this list. But I did want to address bankruptcy because we did get that as a question in the registration process for this session. So I'll just quickly talk about that. So generally, bankruptcy does not affect income. It affects expenses and things like that. Like you might have credit card bills that are relieved and things like that. So it's not an income appeal, but quite often, if you do file for bankruptcy and it's approved, and you have loans or credit card payments that are forgiven, whatever's forgiven generally is taxed as income. So if you received, let's say, $30,000 in loans that were forgiven or credit card debt that was forgiven, that $30,000 is taxed on your tax return. So what that does is that artificially inflates your income figures in that tax year. So you can appeal based upon that. The financial aid office does have the authority to remove that taxable bankruptcy release from your income. So that's something that you would definitely want to appeal if that's your situation. What I would also caution you, though, is if there's a bankruptcy on your credit report, that's probably going to impact your ability to borrow for college. So again, you will receive a copy of this deck, so you'll have this full list. So I don't want to go over all of these, and you'll have these if you need to refer to them later on. Okay, so now let's talk about appealing merit awards. So again, merit money is offered by the admissions office to attract their top applicants in that applicant pool. And as I said earlier, that money is not subject to federal regulation, so those schools have complete control over who they offer that money to, and it gives them a lot of flexibility. But just be aware that generally merit money is not offered at the schools that are considered a reach school for the student because they're not one of the top applicants. And another thing that's really important if you're appealing awards is this concept of demonstrated interest. So what that means is schools track every point of contact that you make with them. So open houses, virtual open houses, if you reach out to the admissions office, if you join their social media platforms, believe it or not, they track all of that. And the more points of contact the student has had with the school, the more demonstrated interest they're displaying. So if you're appealing a merit award, that's one of the things they're going to look at is, has the student engaged with us at all? If they're applying to 10 schools, but they've never reached out, they've never attended an open house, they sort of feel like, okay, what's the chance they're coming here? They haven't engaged with us at all. So that's really important. And if you haven't done that yet, it's not too late. Join their social media platforms now. See if you can register for open houses, because you do want to have engagement with these schools. That does factor in, believe it or not. That's one of those subtle things that most people don't know. And then, as I mentioned earlier, in negotiating merit awards, the colleges have to be similar in cost, selectivity, and profile. And if you're negotiating merit, the school that you're negotiating with is always going to want to see proof of a higher award somewhere else. You're going to have to send them that acceptance letter from another school that might have offered you more merit. So be prepared to share that with them. And here's the thing with merit awards as well. For most students now, most are applying through early action. So you're applying for admission in, let's say, November, maybe as late as December, but you're applying before your fall grades are out. And there's a lot that happens between, let's say, December and March. You might have received awards at your school, or you joined some clubs, or you were voted student president or whatever. So anything that has taken place since you applied for admission that would, increase your profile with the school, those are the things you want to share with them. And again, as I mentioned in financial aid, you don't want to sell yourself in a need-based appeal, but in a merit appeal for additional merit money, this is the opportunity for the student to sell him or herself, because you want to convince the school that you're going to be an asset to their campus. So think back to anything that has taken place after you received your merit award to see if they can increase that because your fall grades were really good, or you took some AP classes and tested in the fall and those grades were really good. So again, just kind of giving you some ideas of what you might appeal. And let's say you have a college that you really want to go to, but they didn't offer you merit, but you feel like you have some new information to offer them. Just because they didn't initially offer merit doesn't mean that they won't if you can share some new information with them. Better SAT scores. Let's say you improved your SAT. So things like that, you definitely want to share with them. You have nothing to lose by trying. Okay. So just giving you some ideas on what you might be able to appeal on. Okay, last screen, and we're good on time, so this is great. So different ways to pay for college and minimize debt. So obviously, first and foremost, is choose a college that's affordable to you. I can't tell you how many times over the years I work with families that choose colleges that really are financially out of reach, but they say, you know what, we're just going to borrow. That's never generally a good idea. So you really want to make sure you can hand them. It's not a bad thing to borrow for school, but you want to make sure that you can afford the payments on those loans. So you really want to make sure that the student is attending a school that's feasible financially. But you've got to also balance that with whether or not the school is a good fit academically. So it's not all about money. I mean, probably more so than anything else, but you also want to make sure the school is a good fit. So I had one student in particular who ended up going to a school that she really wasn't thrilled about, but they gave her the most merit awards and the most financial aid. So she went there. She really was not happy and ended up transferring out after her first year and going to one of the other schools that she had initially applied to. So, you want to try to avoid that from happening. So you just want to make sure that the school is a good fit financially and academically. So those kind of balance each other. And then to try to figure out if you can create additional cash flow with your income, try to conduct a thorough assessment of where you're spending money. And that doesn't have to be big items, that could be small ticket items. But you want to start to take a look at, okay, where are we spending money and can we reduce some of these expenditures? Things like unused subscriptions. I can't tell you, all the apps that we download on our phones. In fact, I had one just the other day. I downloaded an app last year called Rocket Money, which is actually a really cool app. But I'd forgotten that I paid for it. And the charge showed up on my credit card. I think it was just Tuesday and it was $61. And I thought, I forgot that I did that. So I went and canceled that. So we're all, these apps can add up. Or if you've got memberships that you're not using, gym memberships and things like that, cancel them. That's opening up cash flow for you that you can pay for college. And again, on a monthly basis, these things don't seem like a lot of money, but If you've got a gym membership that you're paying $100 a month for that you're not using, canceling that just gave you $1,200 a year that you can now pay in cash for school. So again, just thinking out of the box a little bit. And then consider placing other discretionary expenses on hold while you're paying college tuition, things like new cars or vacation, cosmetic home improvements, and things like that. Those are generally significant expenses that you might want to delay until the students are out of college and you're not paying tuition anymore. So again, just some ideas. And then this is something that I do on a fairly regular basis. Shop your auto insurance policy. I think when COVID hit and we were all stuck at home, I spent some time doing that myself. And I had been getting flyers from AAA, which we also are members of, to check out their auto insurance. So I thought, you know what, let me call them. Our auto insurance was $1,200 less per year going through AAA. The coverage did not change. It wasn't lower deductibles or anything like that. The policy itself was $1,200 less just by picking up the phone and making that phone call. So I would encourage you to shop around. All these insurance agencies, cell phone carriers, they all compete with each other. So picking up the phone and making those calls can very often reduce your bills. So that's something you want to take a look at. Cable bills, are you paying for channels that you're not watching? All that stuff. And then is your student going to contribute from their summer earnings? You might want to say, you know what? We would like you to pay $1,000 a year from your summer earnings, 500 in the fall and 500 in the spring. So that's something that you might want to consider. Or do they have savings that they're willing to contribute toward college? So those are also items that you want to count in terms of cash payments. And then scholarships, of course, definitely. I know all of you here tonight have applied for the Cape Cod Foundation scholarship. Make sure you're applying every year that you attend college. It's not just a one-time thing. So make sure you apply every year. And then if you haven't already checked with your school guidance office, which I think the schools are pretty good at communicating the information about local scholarships, but you also want to make sure that you've taken a look at any local scholarships here on the Cape that are not tied with Cape Cod Foundation. And then you can do a national search on the College Board platform, and it's called their Big Future page. They've got a national search. That's something that you might want to do as well. And then the last thing that I wanted to close with in terms of borrowing, interest rates are very high right now because of the economy. So you really want to minimize borrowing if you can, at least this coming year, because rates are up around 7, 8%, which is quite high. So if you can minimize borrowing this year, and then, if you need to increase that in future years when the rates hopefully go down, that's something that you also want to keep in mind. As I mentioned earlier, just going through your expenses and little expenses and deleting them from your bills, they can add up pretty significantly. So, it's not just the big items, it's a lot of those little ones that add up year or month to month. So just some ideas, again, thinking out of the box in terms of just opening up cash flow so you can pay a little bit more in cash to minimize borrowing if you do have to borrow. Thank you for coming and listening, everybody. I hope this kind of helps you figure out this whole award letter process and the appeal process.
Well, Jodi, thank you so much. This was amazing. You're such a wealth of knowledge, and especially helping to kind of demystify this topic, which can be really challenging, and so much great information in only an hour, less than. So thank you again, and thank you to everyone who attended tonight.